Hello everyone, Will Hassel here once again for your Sunday review and look ahead for the next week of trading. This week was a pretty light week as we had Thanksgiving off. A lot of traders don't trade on Wednesday before Thanksgiving or on Black Friday. They're spending time with their families, but nonetheless we had some interesting news and moves. The U.S. and the other world powers that met with Iran to discuss the nuclear options went successfully, and that caused some pretty huge swings in oil and gold. We had oil down to sub $92 a barrel at one point in time. I believe that was Wednesday, and gold really took a turn for the worse. It looked like it was going to break. It was going to break $1,200 for a little bit. Not a whole lot. That would have been the worst that would have happened for gold, but it just would have been really interesting to go and see it break below that 1,200 level. It got kind of close, but we also had huge moves in the retail space. People like to go and start dressing up their portfolios. There was some questions about window dressing in hedge funds or not, so we saw seeing a little bit of action. Some names. Apple got a whole lot of trading on Wednesday and Friday, and we'll go and talk into that later. But retail was there was a retail frenzy going on. J.C. Penney was having some incredible moves. Macy's, just name a retailer. Best Buy, all basically trying to go and get ahead of those numbers of what was going to happen on Black Friday with their predictions. Here are our 5-day charts for first the Dow Jones. We had pretty good data, if I remember right, for what came out. Pretty good data. Markets continued their trend up. Wednesday was a little. Wednesday was a little bit light because there was a sell-off. I remember talking to a whole bunch of guys in the Leaders Investment Club chat about this, about the market sell-off in the last probably 30 minutes or so, and they said, oh, it's just people are going on vacation, so they're not really want to get some positions off and all that stuff. And then Friday was kind of interesting that we had this huge uptick, and then just Chicago PMI, I believe, was out, and it beat Chicago PMI, and one other piece of data that I am just forgetting off the top of my head. But those numbers, when I boosted up the markets initially, I remember we had very good data out, and then it was also we closed at 1 p.m. Eastern, 12 o'clock Central Time on Friday, and there was just a sell-off into the close. Not sure how that's going to affect us yet. As we can see, the Dow Jones finished under its 250-day moving average and 21. Go to the next chart, the NASDAQ, which reached over 4,000 and closed above it, a record high for the NASDAQ. The Dow Jones and S&Ps did make record highs. They just didn't close out of them for the week. NASDAQ above its 50 and just a little bit below its 20-day. Tech just was strong thanks to Apple and some other names. S&P, once again, we had that downward movement. We saw the downward movement mainly in the Dow and S&P on Friday because the NASDAQ did get lifted by companies like Apple. As you can see, once again, closed under all of its major moving averages. I'll look ahead into the jam-packed week of economic data. Forgive me, I'm going to leave some of them out, some that are not too essential. I'll just tell you the numbers that are really essential. First, I'll go through them all, then I'll come back with a consensus and estimates. Monday at 10 o'clock, we have September construction spending and November ISM manufacturing. Wednesday, we have September new home sales and October new home sales because of that whole government shutdown thing. So that's going to be interesting to go and see. Thursday, we have third quarter GDP predictions and October factory orders. Friday, huge day for economic data. We have November non-farm payrolls, November unemployment rate, October personal income, and October consumption all at 8:30 p.m. So it's just going to be jam-packed. You're going to want to be on top of that data. At 9:55 Eastern, we have December Michigan sentiment number. Now, as a warning, this number is often leaked. You can if you look at the tick-by-tick charts, if you really want to get into it, you can kind of see the numbers, because a while back we had the whole Reuters going and saying that they can go and submit the data early to some of their high-frequency trading hedge funds, because it's technically not a Labor Department number. It's actually like a third-party number. So you may want to watch out there. You can kind of sometimes get a tell just based on how it's moving. The Dow's moving slightly ahead of when the number is given. And then finally, we have October consumer credit numbers. So going back through here on Monday, I'm just going to highlight at 10 o'clock the November ISM manufacturing numbers. Consensus estimate is 55%. The last period was actually 56.4%, so we're looking for a downtick there. That's what's estimated. And for on Thursday at 8:30 for Q3 GDP predictions, they are predicting 3.1%. And the last period was 2.8%, so they're looking at an uptick in the economy above that 3% number. A lot of people have been saying we need to get above 3% GDP to really show that we're growing. And then on Friday, non-farm payrolls, last period we're at 204. Consensus estimate is 180,000. Remember that last non-farm payrolls number was a beat. And then November unemployment rate, they're looking for 7.2%. Last period it was 7.3%, so we're looking for a downtick at 7.2%, or if you want to think of it, an uptick in employment. And then the December Michigan sentiment numbers, we have last period it was 51.1%, and it's now going to be 55.2. Oh, I apologize, 55.1% and 55.2. And then for October consumption, we have 0.2 last period and 0.2 as estimates. So that is your look at the week ahead in terms of economic data. Some stocks that I would like to highlight for this next week to start watching out for is, as we talked about earlier, Apple. I'm not a huge fan of the company. They do a good job of delivering products and all that stuff. It's just right now, despite it being undervalued, and most people saying it's undervalued, it's performed terribly this year. I mean, certainly it's off its lows, but at the same time, it's performed way worse than it has in recent years. And as we see here in the weekly chart, had a really good week. I believe it was a 5% week or something like that. And I'd just say keep a watch for this. I wouldn't enter into a new position, especially since it's at its highs for the last couple months. I mean, if you really want to get into it, 15, 20 days. You can see we're highs for 20 days, for 60-minute, for 9 weeks. We are once again at the highs, so you want to watch out for that. I mean, it's had some great momentum. Right now, this is a huge Black Friday play going on. People think Apple's going to be the product to own. The really big product coming out for this whole winter, Christmas, Thanksgiving, Black Friday, all Hanukkah, all combined into one type of thing. They think everyone wants a new Apple Air. They want, some of the new MacBooks and all this and that. So they're looking for that to be key. Something that I'm going to highlight once again, JWN, not M. My play makes me want to do it in capitals. My play, Nordstrom's. I've been saying to go and get into this for for like 2 or 3 weeks now. Performed rather well. If you look into it, I've been saying kind of get into it around here. I've had a nice uptick. Kind of followed the broader pace of the markets a little bit. Some worries were going on to the high-end space. I'll get into that as we go into the cores. I still think Nordstrom's is going to do fairly well this holiday season. It closed below its 5-day. Closed below all of its major trend lines, except the 200 day is looking pretty nice right there. slightly lower, but overall upward trend pattern. I still think it's going to be 200-day still looking pretty strong, although it's slightly going down, but it's a nice upward trend. I think they're going to be a great play for their earnings. I think retail's coming back. I don't think it's all that bad as everyone cracks it up to be. I wouldn't buy it. I waited 62. I feel like it's going to start trading out on Monday, somewhere around then. I'd buy it there, so then we can hopefully get up to 63.50. 63.50. Sell it there. Just some trading. It'll get some major momentum based off of the personal income numbers on Friday. That would be what's mainly going to be looking for there. I still think it's going to do really well this winter, though. Moving into some other, those are your two plays for the next coming weeks. Apple, I'd say buy some. Maybe when it gets down to, and I don't really like trading Apple all that much. I feel like 545 if it retracts to there, definitely buy some, probably 550, 545, because I feel like there's going to be some selling involved because it's had a really good week. So once it gets around there, I'd say buy it. Trend lines look pretty strong. Although it closed below its 21-day, still trend line looks pretty strong. So yeah. QQQ I own, and we've already gone over that. Go into some JP Morgan and some AIG, and where's that other chart? That seemed to have slipped away. And my new play, my new stock that I got into this week, Visa. So I will dive right into JP Morgan first off. Oops, my bad. Gonna dive into JP Morgan first off. Had a pretty strong week. Followed the market down on Friday, closed below its major trend lines. Nothing too much to worry about. I mean, we were at all-time highs. So, I mean, on Wednesday we are at all-time highs. Not terribly bad to take some profits here, and lighten up. So, I mean, we get down to 57, pull the buy trigger because it's going to go up to 58 right away because it's just looking strong. Like I said, it's going to play it's been playing catch up ever since it got out of all of its legal problems. Checking on my time. Next, AIG had a pretty good week. Really, it was more of a psychological week, and I think for a lot of other AIG traders I was looking at over on StockTwits, been following AIG very closely, the sentiment on there, and I will tell you that right now the sentiment is 100% bullish. That's pretty crazy. Wow. Wow. It's because of all that momentum that we've been having throughout this week. It really is. I mean, Wednesday was a great day. We cracked above 50, which, as I've been saying, we cracked above the 49.50 level, which I've been saying has been a huge psychological issue. It really was. As soon as we broke past the 49 resistance, shot up, broke the 49.50 level, shot up, went down a little bit, shot up again, broke 50. Literally, as you can see here through this chart, as soon as we started hitting bids for that $50 level, it just sprung up all the way up to 50.35 and just went down, then hit the bids up, broke below $50, hung around that 49 resistance, closed, opened lower, hit above that 49, kept above the 49, was over, hit the 50. I really wanted to see it close above 50. That would have just kept the trend really going, and I really want that. And that's going to be the key for AIG. Definitely a close above 50. Sentiment, psychologically wise, it'll be really good, and technically wise, it'll be really good as well. It closed below the 21 and 50, so really watching that 50 that $50 range. Starbucks had a pretty good week too. Almost. Nope, that's not Starbucks. That's Visa. Starbucks had a pretty good week. I thought it was going to hit all-time highs for a couple minutes there on Friday. Really, really spiked up. This also, despite what I thought, I really do think now Starbucks is going to be one of the major victors of this holiday season. Eggnog lattes, peppermint mochas, all those festive lattes. Whenever I'm in the Starbucks, people are buying them. People love them. Some people, all they drink are those peppermint mochas that are now coming into season right now. And as we saw here, almost hit a new. I was really hoping that it would hit a new 52-week high, but it got really, really close. It really moved quite a lot, as we see here on the 10-day. Ever since that Kraft news, it's just been going higher and higher. 200 is pointing up, 50 is pointing up, despite the fact that it did close below those levels. It closed below the 200-day on Friday. I want to see a close on Monday above the $82 mark. I think if we see that, we're definitely going to keep that tread higher, because as we saw, broke above that $81.50 level up, and then $82 has been major resistance here for the last couple weeks. We haven't really gotten up to there ever since a while back now. And if we go and look back even further, 10 weeks out, $82 has just been killer. We need to break above there, because there's our 52-week high. If we want to see another 52-week high, we're gonna have to break above that. So yeah, I really do think Starbucks now. When CNBC was reporting from all the different malls, all you heard was the Starbucks lines are jam-packed. People are walking around with Starbucks. I saw it when I went shopping out on Black Friday. People had their Starbucks cups all over the place. It's really going to be. I think they're going to knock the ball off this quarter. Coors, Brian Solzy, I love you so much. Shout out to him. Follow him on Twitter. Black Friday, all he was doing was just live tweeting, because he's a retail analyst. Black Friday, and he was showing the comparison between the Coors stores that were in some of the department stores, like Nordstrom's and stuff like that, compared to the Michael Kors stores and all the mini stores inside the department stores. Coors was packed. Coach was not. He says, he really likes Coors coming into this. I really like Coors coming into this, and that proof right there just really solidified that Coors is going to be big. It's going to be ginormous this holiday season. $82, kind of like Starbucks, is really the line that we have to hit. Was support for a while ago back there. Offered up some resistance, although you saw that spike up. When it did go above that resistance level, as we can see here, popped up and then went down. It was kind of disappointing on Friday to see Coors go down. Closed just below its 50-day, 200-day, still looks strong. If we go and we look back here to the multi-week, we find that once again, here we go, $82. Really, that whole $82 range, really, we need that for another 52-week high, for a brand new 52-week high. So for both Starbucks and Michael Kors, looking at that 82 line. And on to my newest move of this week, and I also recommend this for anyone who takes my recommendations for this holiday season. I bought Visa, and I bought Visa on Tuesday. On Tuesday morning at $2.03 a share. I bought it, and I think it's a strong. The reason why I bought it was I'm banking on this being a play. Because for the consumer for this retail season. Because if I think Coors is going to do great for this retail season, if I think Apple's going to do people saying Apple's going to do great, if Starbucks is going to do great, if Coors is going to do great, if Nordstrom's is going to do great, where they all going to buy their great items from and buy from them from, it's either going to be on their Starbucks cards, for Starbucks, or they're going to be buying them on their Visa cards or MasterCards. Either one of those you can buy. I didn't buy MasterCard because it's really expensive, as in the stock price. It's like $700. I just didn't have that much capital, and I can't buy options. So I picked Visa. Only picked up 4 shares, but still a lot of money from my account. That's because I only have about just a little bit over $4,000 in there. So I'm banking on this. They're going to knock out earnings. We need all-time high is 2205.25. The trend has been on fire, as I had my friend Ben C. Banks. Please follow him on Twitter and StockTwits, and check out his his weekend update videos on all of his different setups. They're awesome. I asked him about the technicals. I said, Ben, I'm thinking about Visa, as a retail play. Can you please check out the technicals for me? I know you were just amazing at technicals. He came back, he said, well, the trend is looking on fire. Be careful, it is still a trend line, and that can change, but right now the trend looks on fire. So I hit the buy button on that. Close below its 200-day moving average at 203.46. It really was looking up here to be that we were going to get a 52-week high, a new 52-week high. Old 52-week high is 205.25, but looks like that 508, 507 resistance was just killing us. I saw bids coming and going. As you can see, once it hit up at that resistance, pulled back a little, hit up against the resistance again, then just fell with the overall markets because it is a Dow component. We break out into 2 weeks ago. Like I said, the trend has just been on fire. Although we did close below the all the major technical lines. I'm gonna go up and bring up my portfolio right here. As we see here, AIG, I'm still in the hole because the average unit cost was $5.79. That's with commission, because I did buy it at $5.09. It had the 7 cents in because I bought 10 shares, so $7 is my total commission. So whatever you see here is like the average price. I said I bought it at $2.03 on the dot, but because I've only bought 4 shares, it included the commission in my average unit cost, so that's how much I'm down. So not down too much. Visa's going to turn here pretty soon, and so is AIG. In fact, at one point in time, I was in profit on both of them on Friday. So I think I'm just going to wrap it up with that. Thank you everyone for following me on Twitter, for watching all my videos, for going onto my blog. Please continue to check out me and all the other Leaders Investment Club members and all their videos and articles, because they put off some really great stuff. And I would just like to thank you all again. See you next time.